Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, yesterday I did an update on the three commodity metals that I've been bullish on. Copper, which got decimated, um, maintaining the bullish rating on that for now. Platinum, the same thing. I think platinum still has a good amount of upside, and silver. Um, Now I can concentrate on my other buy recommendations with you. And so let's get into it. Before I get into a buy recommendation, I'm going to show you something. You're probably rolling your eyes, but I want you to take a look at what's going on with the US dollar. This is really kind of a key in figuring out the puzzle, at least tendencies. These tendencies don't always work, but they definitely similar to seasonality, they definitely are right more than wrong. And with the US dollar, you can see we've been in a big downtrend since January. And we had here an ending diagonal pattern, these two converging red trend lines. And we had a positive divergence on our RSI, and we broke out in a big way. And now we've come back and corrected right to the rainbow convergence. This is a daily chart. So if the dollar turns around and goes higher tomorrow on Monday, then that's going to have a lot of implications on several of the things that we own. The two things that I've included in these are Akamoto clouds. They're like a trend line, and this is something that Eastern Europe, Eastern technicians use. I like them; they're okay. And I want to show you how gold is affected to the dollar. It's an inverse correlation. And again, these things don't always work hand in hand. They might be off a little bit, but the tendency is there. You can see as the dollar peaked and started its downtrend, gold started its most recent bull run. And I also have the red line here that's hard to see is crude oil. So crude oil has a little bit more of a tendency, except for this spike. It might have been, Iran or something like that, but pretty much kind of goes in the same direction as the dollar. So the implication here is if we get, what this rainbow convergence suggests is we get a higher high. Most likely, a lot of times you'll see on an ending diagonal pattern that's found at the end of market moves, in this case, the dollar move, usually you'll come up to about the top of of the beginning of the ending diagonal pattern. So let's call it 101 or something like that. 2.5% or 3% on a currency is a pretty big move. But if that happens, I'd expect to see some weakness in gold and the metals for a few days, and maybe some upside in crude oil, which I haven't made a recommendation on, but I'm looking at that. So all this is, it could affect some of the things that we have. So if the dollar goes lower on Monday, then that means, the euro, Swiss franc, Japanese yen most likely will be up. And that means that metals will do better, and maybe a little bit of weakness in crude oil. So that's what I wanted to show you on that. Also, one last thing. The US dollar, normally when the US dollar is going up, uh, when the market has big declines, the US dollar goes up. I'd say 95% of the time. And the reason is people want to be in liquid currencies. They don't want to own a Turkish, I don't know what their currency name is, or, you know, uh, something of a third world country. They want to come to the dollar where they have liquidity and some stability. So if we see the dollar go up, maybe that'll coincide with some more downside on the S&P 500. So the S&P 500 today, this week, this is a weekly chart, each one of these bars, it was down 2.5%, let's call it, on the week. And more importantly, we have a bearish engulfing pattern, where this red bar this week totally encompassed last week's up move. So these are all bearish engulfing patterns. So you can see almost every turn in the market has been accompanied by that over the last couple of years. Um, we have pretty good sized negative divergence, almost, a year and a half in the making. So maybe we see more downside in the S&P 500 tomorrow, next week. And how big is that decline going to be? Is this the big kahuna that we see on the monthly chart with a 4-year negative divergence? We don't know that yet. Here's where I went bearish. Again, I did some uh, I would say some nice trading on the way down and enhanced the amount that was made on the way down. So, 'cause you can see though, we're really not too far below that. So that's enough of that. Seasonality also is calling for a little bit of a rise in the S&P 500 this month. So maybe we get some weakness next week, and then we get some sort of a rally for a week or two before we go lower if seasonality is going to play into that. So just things to think about. Okay, let's go back here. Verizon. So these are charts that look solid. This is a 6 month symmetrical triangles, resistance support. It's broken out a couple times, hasn't really gotten going, and tried to do it today, and then it kind of came backwards, but it was up a little bit. So Verizon looks very solid, still in place. 6.5% dividend. It's a nice thing to have in your portfolio. This is the MJ is the cannabis ETF, and it was pretty much flat this week. It's kind of interesting because MSOS, another cannabis ETF, was up significantly. Actually, today I think it was up 20% intraday, and then ended up like 6% on the day. That doesn't mean run out and buy that one. This has had a nice big move from looks like 15 to 23, and now it's gone sideways in a consolidation, working off this overbought condition. So, this is one you could be buying. I do own a little bit of MSOS. I have more of MJ, but I just wanted to point that out. So I'm surprised this wasn't up more this week. Maybe next week this is up more than something you're going to chase with MSOS. So with MSOS, I was selling today. With this, I did nothing. Solar stocks. So, it's run my stop. My stop was 37, but I'm going to lower my stop to 35. So here's your inverse head and shoulders pattern, neckline, breakout, price projection 46. We got a really good start. I was telling you on last week's call, sell into the strength, sell into the strength. And now we've had several down days in a row. So I'm moving my stop down to 35 because we're right on the neckline. So this would be a place where you'd want to buy. So this was something I was buying. I wasn't buying anything overly aggressive, but I was certainly adding to my position. And another reason why I moved down my stop, this is an 8 month chart. We're gonna look at the 2-year chart. I'm gonna show you on the weekly chart. This is a daily chart. Each one of these bars represents a day of price action. On this chart, I'm gonna show you a weekly chart. Each one of these bars represents a week of price action. And we have a rainbow convergence coming right here, right now at about 35. So if this is correct, we should get a new high if it can hold here. And the reason why I was adding again to this is that I know if it gets to 34, I'm out. If it holds, it promises a new higher high. This would be a type 2 retracement, and I'd be looking at something higher than 40. So I was adding to this today. This is Circle Internet Group. This is tied to cryptocurrency kind of things. Really volatile. This is a very short-term chart. This was a flyer. This is something I said I didn't have as much confidence in because smaller patterns are not as dependable as two, 3 year patterns. So I said, I'm not putting as large of an amount in this kind of a stock, but this is a symmetrical triangle. It's only I don't know, 3 or 4 week pattern. And we broke below that slightly today. I'm lowering my stop from 170 to, let's call it, 165. I don't want to see it go much lower than it has today. This is a 2 hour chart. Each one of these bars represents 2 hours. So it gapped down and it went sideways there. So I'm going to give it another day. If it's down on Monday, I'm going to be out of this. So it looks like it's setting up or possibly having a very small positive divergence here on the RSI. So giving it one more day on this. Exelon, here's my stop at 42 because there's a possible head and shoulders top, bearish head and shoulders top, a left shoulder, the head, the right shoulder, the neckline. If that gives way, this thing could really go down, down to the 35 level or something like that. And I definitely want to lock in my gains from where we went bullish. Um, had a nice, bonds had a great day today on the weak job report. Uh, Utilities, REITs, they're interest rate sensitive, so they're going to do well in that kind of environment. So this looks good so far. But what was I doing today? I was selling. I'd sell some. Uh, you know, buy some down here. I'm going to sell on each up day, each up week. So I was selling today. China had a big down week. Down each one of these bars represents a week, down about 5% on the week. It looks like we have a bearish engulfing pattern here. So I'm not rushing out to buy this, but I certainly nibbled at this today. Each day it was down. I think it's been down like the last 4 days. I've been buying small amounts because what was I doing on these big up white bars? I was selling. So I'm not even back to it, reaccumulating all of that I sold on the way up here. And I can't get a stop anywhere close, which also makes me very uneasy. So still bullish on China. Um, this is National Retail Properties. This is the last stock I have, and then I'll do the 10-year Treasury real quick for you. Um, so here's your big inverse, bullish inverse head and shoulders pattern. Left shoulder head. Shoot. Oops. So weekly chart, each bar represents a week. Left shoulder, head, right shoulder, neckline, breakout, came down, kind of broke down, came back up, came back down. I bought it again here at about 41 and I said buy at 42.37. So, we're kind of flat to slightly down right now. I do like there's a small inverse head and shoulders pattern here. We kind of went up, hit that target, came back down. We do have a bullish hammer today, this week, where prices opened the week at 42, started selling down, selling down. Then by the end of the week, it was able to recapture that. So, I'm still long this, but we're going to take a look at this inverse head and shoulders pattern here because on a daily chart, we got to get through this confluence of moving averages. So, the small head and shoulders is saying 50. We got to 43.60, so we didn't hit the price projection. And now we're re-challenging the neckline and the breakout. We have a bearish rainbow convergence. And so what was I doing today on an up day? Up almost 2%. I was selling and I sold a pretty good amount, maybe 15% of my holding in this. It's probably 5%. It's not 5%. It's probably about 3% of my portfolio, and I sold 15% of that. So if it can't get through 42, it promises a new lower low, which would be below 41.03. And then I would look maybe to buy it back. Again, this is interest rate sensitive, so it should go up. And the reason why I think that is that the 10-year Treasury chart, had a big day today, on the bad jobs report. So here's our bullish inverse head and shoulders pattern. Here's the neckline. Price projection is 100. We're at 96, let's call it. I'm not going to go for the last tick. It gets up around 98, 99. I'm going to be looking to get out of this if there's any kind of signal to tell me to do that. Um, but I've been very patient with this. This has not been easy. I know the whole media is calling for higher rates, and I just stuck with the pattern, and it's been working. So this still looks bullish. So REITs and utilities should still go up. But what you want to do, what was I doing today? I was selling some IEF. You got a lot of IEF and IEI, SHY. The 1 to 3 year Treasury was up a lot for a 2 year Treasury. So you should be selling some on that, and then redeploying some of that money into TAN or into Verizon or some of those things. So thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors. Have a great weekend. Adios.